Hello, good morning, my friends. You're watching on the Smart Money Culture TV network on your TVs in Texas and Louisiana, as well as streaming around the world on X, YouTube. I'm still scared of LinkedIn for the moment, but all the rest. But I'll be back on LinkedIn soon. I've been sharing clips and stuff. So my LinkedIn was was hacked, and it took me a long time to get it back, like over a month, about a month. But I got it back. I got my LinkedIn back, so I'm pretty excited about that. It's not the biggest deal in the world. If okay, all right, fine. I mean, it is about 17 or 18 years of my working career, right? But okay. Um, but anyway, now that I got it back, I set up my two-factor authentication on it, and I'm pretty. I am. I will say pretty excited about that. Thank you to the team there, the help team that helped me get it back. The hacker got on there and he started posing as me, and he was trying to get people to send money. Don't ever send money to me without picking up the phone and talking to me. Okay? If I say send money, you know me. Pick up the phone and call me. Don't just send money somewhere. You know, especially with AI and everything else, you do not know, guys. So yeah, that word to the wise on that one. Don't ever send money to me without talking to me. Pretty interesting DNC convention. I would like to say I'm on TV, so I can't say exactly how I want to say it, but what a mess it looks like to me over there. They can't decide really much anything. They got the walls up everywhere. The walls are completely encased the whole place, and then they're like, "Well, it's empty." Well, I mean, of course it's empty. Nobody can get in. So there's protesters all over the place, and so they have thousands of protesters outside. And the protesters are funny because, as I've said over and over again, after January 6th, I noticed that the protesters that had been the agitators there at January 6th were probably the same agitators. I said probably intelligence agencies, but probably the same agitators that agitated the Black Lives Matter protest and all that stuff. And they were the ones who probably burned everything, and not the average person that was just protesting. So anyway, but you got those agitators all over the place. They flew them in from everywhere. They're in from Europe. They're in from all over the place, and they are doing their thing. A lot of it just appears to be, for TV type of protest, but that's all going on. And then inside, of course, it's not full. It's obviously not full. So that's pretty interesting, I think. I would say, oh no, we were way ahead. But after what happened in 2020, all bets are off. We still have magic electronic voting machines, and we still have the mail-in ballots. And now we have 20 million newcomers. So we'll see. I'm going to talk to my guys, and we did a series of interviews before the primaries, and I'm going to circle back around and see if we can get some of the people that did win their primaries to either come back on the show or come on the show for the first time, and have ways that you can help them out. It is it's funny to watch, and of course Kamala up there. Kamala, she doesn't look quite right. I put out a post yesterday. I said, "Is this the same person?" And it's so weird that we live in a time now where like they can just switch people out. Doesn't look like her to me. It looks like somebody else. Maybe I'm wrong. I never really looked at her that much. Now she's supposed to be the first black female or whatever. And that's funny to me too. So I'm watching. I'm at my family's house. We with Beach House, and they got the news on all the time, right? And so yeah, it's on. Everybody's old. older than me, so I have no say in TV. I always say just turn it off. I don't watch TV. But anyway, so I would just watch it sometimes, or at least it'd be back in the background. I'd hear it. Man, that's some crazy stuff that they go on and on and on about. Yeah, I don't know, guys. So they're gonna continue to push. They're gonna continue to push that. And as I said, we still have the same voting apparatus. To me as well. To me, and I don't want to offend anybody or anything, but to me, it looks like, I don't know. Trump may not. He doesn't look like me. Like he's like he looks like he'd be okay with losing at this point. And in a way, I don't blame him. I mean, he's got shot at. He's got his life up in upheaval. But he kind of reminds me of the moment of, I don't know if you guys are old enough to remember when Romney ran, but there was like they caught him on video, and they said, "Yeah, how do you feel about losing?" And he said, "Oh well." And I was like, "Oh wow!" Like it was a weird moment. But it may be that they've just beat him down so much that, it's like Andrew Tate said, "Hey, look, dude, we're going to let you live. You're not going to go to jail. Your kids are going to be okay. All right. You're going to lose this one." I don't know. We'll see. I hope not. But we'll see. That machine that the left has is crazy. I mean, it's 24/7, like government sponsored media that just goes drones on and on and on. Everybody, of course, they hate Trump and they love Kamala. I mean, Trump is just horrible. He's going to jail. He's crooked. I mean, it's crazy. It's crazy, guys. It's really crazy. So we'll see. We'll see how that all shakes out. We're not far away. We're about 77, about 77 days from voting. Bitcoin is flying. Gold is flying. Futures are a little tepid this morning. We'll see. I'll have Matt on here in a second. It could signal a bit of a pullback. We'll see here. Let me just look at the Dow futures again. Yeah, there's a little pullback on the Dow futures. Also, as well, the Hong Kong Stock Exchange is down, and the Japanese yen is down, even though the dollar is down a bit, although it seems to be bouncing just a little bit, maybe, or at least stabilizing. But I feel like that's going to continue. Two of my favorites here are up quite a bit. I'm just going to share my screen real quick before I move on here because I have it pulled up. But you can see, I mean, this is most of the market here. Dalgo, my favorite meme coin. On the this is on the Algorand. Polka Gold put up. They have 248,000 in liquidity right here. You can see 248,000 in liquidity, and $185,000 market cap. So this thing is really built to push. Now then, if we go right over here, we can look at and that was up. Just so we can see that real quick here, that was up about 10% today. This is the Dalgo. This is the P Gold pair right here. Now then, if I this is on Dex Screener. So then, if I go right over here, am I on the right? Share this tab instead. I switched tabs. Here we go. Share this tab instead. So here we go. This is the Dalgo P Gold trading pair right here. And then if I go over to P Gold, Polka Gold as well, this one is overperforming, up 12%, up over 12%. Now remember, Dalgo has over 10% of the liquidity of the token total supply of P Gold locked in its liquidity pool at launch. So it's probably the bottom that you're looking over there, right about one. I think it skidded across 170 or something like that. It's like 185 now. Market cap. We're cruising right back up on Polka Gold, 804,000 market cap right now, cruising back up to 1 million fairly easily here. I think looks like this continues. Algorand has had a great day. Algorand up over 5% on the day. But I am bullish on these two because of that locked liquidity. Just to give you an idea as well, so it has an $805,000 market cap for P Gold. Well, they have locked liquidity of like 750 or something like that thousand. So those are some serious assets. Polka Gold and Dalgo, I'm a big fan. Yeah. So anyway, that's all pretty interesting. Now, Rep. Thomas Massie calls for the end of dual citizenship in Congress, while rumors swirl that Anthony Blinken, the Secretary of State, Christopher Wray, who is the head of the FBI, are both holding dual passports with Israel, and so are many congressional reps. Now, of course, it's very hard to know exactly who is holding dual citizenship, but the rumors are swirling that they are. And if you have a Secretary of State that's holding a passport for a country that we are directly involved with, I mean, we have like more than half of our ships are over there in the Middle East to protect Israel. Maybe that's what we should be doing, but maybe the guy making the decisions shouldn't hold a passport for the place. Might not be in our best interest. Thomas Massie, the man with the plan. This is Thomas Massie right here. Thomas Massie and the Fed. Massie, he knows what's going on. He understands what's going on. You have to say things exactly the right way or else you get in trouble, right? And dual citizenship in Congress. I mean, these people are supposed to be representing the United States. I think it is. He says at the very least, they should have to, just like they, say what assets and everything they have, they should have to tell what citizenships they have. That should be public information, and recuse themselves from making decisions and voting on certain things that would affect those different countries that they hold citizenship of, which I think is a good thing. Now, a lot of this stuff that he brings up may or may not pass right now, but it's good to start the conversations. These are conversations that we need to have. And then we push it forward. Let's talk the markets here. We got a lot of green candles. We got a lot of green candles there. Looking good, Matt. How are you?
Hey, good morning. Great, thank you. Actually, I was hoping to show you where I am. This is a virtual background. I'm actually in Tirana, in the Mac Hotel overlooking the National Stadium here. It's an amazing location. What a beautiful place.
Wow. Big Matt on the world tour.
Well, not many people visit Albania. It's a relatively, small country, I guess, but it's just so up and coming. It's so bright and vibrant. It's absolutely amazing. The hotel's beautiful and everything is still reasonably priced. Everybody's so friendly. Fantastic place to be.
So they're not on the euro, right?
They're not on the euro. They have their own, I think it's called the lek, their own currency. Yeah. I mean, you can spend euros, I guess, spend any currency. But
they don't get the euro tax that I always talk about when you're using the big currency. That's what Europe used to be so cheap to travel around, and it was great. Now it's more expensive. Actually, it's still because it's not tipping and stuff like that. I mean, in the U.S., it's like ridiculous. You go get a cup of coffee now, or not even a cup of coffee, like whatever, and they like ask you if you want to tip. And you're like, what am I tipping for? Like, and it's like they embarrass you. Like, no, I'm not tipping for what?
Yeah, tipping isn't. I mean, obviously you do tip and you try and tip, but people actually often refuse it. They're actually very generous. We were out the other day.
It's true. In Europe, they're like, no, it's fine.
Yeah, I was just buying some popcorn. Didn't have any small change. Said, oh, don't worry, just take it. So nice. People are very friendly here.
Albania, huh? So what are you doing there? Can you talk about it, or is it like top secret?
Place to be. It's actually. Everybody is very interested in finance of all sorts. There's a lot of money over here. They're a big oil producer, I think. Business-wise, they're very advanced. The cities, it's just a beautiful place to be. So, yeah, I'm actually supposed to be on some TV shows here talking about cryptocurrency and digital assets and that kind of thing. So there's a lot of interest over here. It's really good.
Nice. Well, let us know. I can, I can always stream stuff. I mean, there's probably license and stuff like that. But
yeah, definitely. Cool. Okay, we'll look at that. I'll go in to present my screen. We've got some, I think, interesting stuff. As you said, we're having a good run on the stock markets. It's actually been the longest run since November that we've had in the S&P 500 and the NASDAQ. So getting a really good run on assets at the moment, good positive run. So I'm just sharing my screen, and I hope that you can see.
Annualized gross domestic product growth.
Yeah, I'm showing that because basically we're in what I would call the Goldilocks zone at the moment in the US economy. So we do still have, as you can see, really robust growth. We've got higher GDP than was expected at 2.8%. That was on, I think it's July 25th, they announced that. So GDP growth is really strong, and yet we are seeing the early signs of unemployment picking up, and we are seeing inflation tailing down a little bit. It's coming off a little bit. So we're kind of in the Goldilocks zone, but we're actually really are very much on a knife edge because inflation's still above target. We still have solid growth, but with that unemployment picking up, growth is at risk, to say the least, and inflation is also still elevated. So it's on a knife edge, but right now it's probably a good backdrop for have zoomed out. It's often very good to zoom out. We've been focusing recently on the short-term outlook for gold, and we've been saying it's positive, that we're expecting higher highs in gold, and that's precisely what we've seen. Yet another new all-time high for gold.
Yeah, it's moving, man.
Absolutely. So I wanted to look at the longer-term outlook, and this is going back right back to 2016. So looking at 8 years worth of price history here. And we can see from an Elliott wave perspective that basically looking, first of all, from the beginning, we've got a wave 1 up in red, 2 down in red. Then the wave 3 up, we haven't even completed wave 3 yet, I don't think. So the wave 3 itself is made up of 5 waves. So we can see that beginning from this wave 2, that's the start of the wave 3 in red. But the wave 3, as I say, is made up of 5 waves. So we have wave 1 up in blue, 2 down in blue, 3 up in blue. Now the 3 up in blue takes us to exactly 3.618 times wave 1. Now, whilst that's not actually a Fibonacci number, so it's the 0.618 is Fibonacci, 2.618 is a Fibonacci number, 3.618 is not a Fibonacci number, but it's still a very, very common extension that you see with crypto and with other assets, but particularly crypto because they tend to extend. They're more volatile than traditional assets. And so we've seen here an exact 3.618 extension of this wave 1 to give us a wave 3 in blue. And then we've got a very nice ABC wave 4 down in to complete this wave 4 in blue. And then we're working on a 5th wave in blue. But once again, a 5th wave is also broken down into 5 waves. So we already have a wave 1 up in red, 2 down in red, working on 3 up in red, and I think that 3 up in red is complete. And I have been saying that we're working on, we actually looked at the shorter time frame, this being an ending diagonal, and I think it is an ending diagonal. So I'll open it out in a minute so you can really see, but we have wave 1, 2, 3, 4, 5. An ending diagonal is one of those occasions where you can get overlapping of the waves, but you normally see them and when I show you the Fibonacci...
Let me just so your connection is fine most of the time, but if you just have something else running, every once in a while it dips out. So it might just be when you might not be able to do anything about it when you're switching pages or something. But
okay, I'll try. I'll try. I don't know whether you can see me. Maybe the internet's a bit dodgy in here. I'll go to a different place next time. Can you still hear me now?
Yeah, I mean it's like just twice over the last since you've joined, just twice it has dipped out. So I just wanted you to be aware of it.
Oh, apologies for that. I will go to another a place closer to the router maybe next time round. But just basically saying that on gold, we are looking at, when you think about gold, what is gold all about? Gold is about being a hedge against inflation. And if you remember what I just said, we're on a knife edge, basically balancing between inflation and growth. And we've got solid growth, but we've got elevated inflation. And this is the knife edge that the Fed are having to sit on right now. And it can go either way, or it can actually stay on the knife edge, which would be remaining in the Goldilocks zone, and that would be what we call a soft landing. So basically inflation would come under control and we still maintain reasonable growth. That would be a soft landing. That's a possibility, but it's quite a big stretch, bearing in mind we're way above target inflation at the moment. But it's quite interesting to see how the markets interpret this. So the markets are basically at the moment interpreting this in a good way, because right now we are on for a soft landing. And that's why we're seeing risk assets pumping really well, and why we've seen NASDAQ and S&P on the longest run, positive run since November. So looking really, really good there. So gold is still looking very positive. So bearing in mind, we're looking at 1, 2, we haven't even finished wave 3 yet at this fractal. We've not even finished it, so it's still got higher to go. So new all-time highs still to come. So gold, being that hedge against inflation, means that clearly inflation is still a bit of a concern, and that's why gold is being seen as a really good investment, as a safe haven to store some of your assets to hedge against inflation. So we do expect quite a bit higher still to come, a few new all-time highs still to come in gold. And if we translate across to risk assets, probably let's move to the DXY next. And you're right, the internet is a bit slow. I can see it's connecting, but it's slow.
Okay. That was a smooth transition on this end.
Okay, so we're seeing the DXY, so the dollar index here. So if we're seeing potentially slowing inflation, well, we're seeing at the moment inflation is slowing, but growth is also at risk because we're seeing higher unemployment figures. So that's why we're seeing the dollar falling. So we're seeing here dollar fell below this support line, and we did indicate that's a possibility, in fact, a probability. Whilst I said it's a support zone, I said it's likely to break to the downside because the economic factors are telling us that the economy is showing some signs of weakness, particularly with unemployment. And so that's why we're seeing, and don't forget, by the way, in response to that, the Fed are talking more dovishly about reducing interest rates. If you reduce the interest rate on the dollar, it means the dollar is less attractive for people to invest into. And so basically money flows out of the dollar into risk assets and into other currencies. And that's why we're seeing the dollar falling below support here and dropping down. Now that's normally seen as a positive for risk assets. So the fact that the dollar is weakening, it just means more money will flow out of the dollar into risk assets. And that's why I've got the indications here for potentially lower dollar, which would be positive risk assets. So we'll flip across briefly now to oil. We've seen substantial sell-off in oil. So we're down now. We're up near the $80 area just very, very recently. You can see here we're at $84 only less than a month ago, about a month ago now, we were at $84. We're now at $73. So in percentage terms, that's a very substantial fall in the value of oil. So that's telling us most probably, first of all, geopolitical issues, tensions are diminishing at the moment. And I know what you said about what's happening in the Middle East with the buildup of the military in the Middle East, particularly the American military. Well, maybe that's a deterrent for further escalation. I don't know. But at the moment, the geopolitical tensions appear to be subdued. And also we are seeing potentially weaker growth with unemployment figures rising. So that's why I think.
Yeah, I think as well that they've decided at this point, nobody wants a war this close to the election. So all the talk of trying to get into the war before the election, well, I think that's kind of pushed off at this point. Nobody wants a war before the election. That's the kind of what I'm getting.
Very interesting. These political influences, how powerful they are, affecting both geopolitical issues and macroeconomic. So it's affecting the economy. Clearly, they don't want to do anything which is going to, create waves effectively in any of those arenas. And so they're trying to keep things, keep the ship on a steady, keep everything steady, no shocks in the market, and then hopefully that'll give, an even playing field when it comes to the election. No idea what will happen. I mean, you just don't know what will happen. Trump has been written off a number of times in the past, and he's come back. You just really don't know what's going to happen.
We really just don't know what's going to happen.
Yeah, but from a financial perspective, things are looking positive, and we've been saying that for the past few days that we're expecting a rebound. And I think that patience is really the order of the day for investment. I actually went long again, and I talked about DCAing, dollar cost averaging, yesterday, where basically you add to your positions when the markets dip. And we've seen a very clear situation here from wave 3 in Bitcoin here, where we have an A, B, C, D, E, which is the typical triangle situation, pre-terminal wave, and then you expect to push higher from there. That's precisely what we have seen from this E wave, which overshot, and it's allowed to overshoot. The E wave is the only one allowed to overshoot. And it did do just temporarily. We just see here on a daily basis, it didn't close below the trend line here. It just spiked below briefly and then was bought up very aggressively and pushed price higher sharply in a very typical impulsive move towards the upside. And that's what we've begun to see. And I expect that to continue and to take us to new all-time highs on Bitcoin. So we've already had a wave 1 up in blue, and I think we're probably either complete or we might not be totally complete. Let's just look on a shorter time frame to open that up a little bit and look at the possibilities here. So here's that wave 1 up on the 4-hour chart here. I'll open it up a bit more so we can see it even more clearly. So we've had here the wave 1 up. So 1, 2, 3, 4, 5. It's basically made up of 5 waves. That's a wave 1. The wave 2 may or may not be complete. We can't be absolutely certain. So we've had the wave 1 up. The wave 2 could be complete here, or it could be made up of this W wave could be here, X could be over here somewhere, and we could still have a Y wave down. This is why we use the system of dollar cost averaging, because there isn't ever any absolute certainty in markets. And this could just be an A or a B and down, or a WX and then Y down. But either way, it's a corrective move down. So this was impulsive in 5 waves. This is corrective. It may have completed here, or it may just go a bit lower here. So because we're not sure for certain, we dollar cost average and buy in at different levels, anticipating that we will move higher and substantially higher to new all-time highs, most likely in Bitcoin. And so we dollar cost average and buy in at different levels. Whenever the market dips, we buy those dips. And that's basically the system of dollar cost averaging, buying at different levels, buying the dips, anticipating a rise in the market. So you're not exposed all at one particular level. You'll average your position out. So I bought in yesterday on a number of assets. I bought in Solana at 142. It's now 146. We'll look at Solana in a bit more detail. But this is looking really constructive. Even if we dip lower, it's just an opportunity perhaps to add a little bit more to your bags to potentially wait for that push high.
I went in and out. I bought the dip over the weekend, and as we pushed up, I exited, and then now I'm wondering, if are we going to pull back? I think we'll probably pull back a little bit this week.
I mean, it is entirely possible.
But we might not. But I only like to make these days. I only like to make trades I win. So
yeah, I mean, basically we've got basically 3, and it's even moving up from this W wave 2 proposed here. We've got some kind of corrective move to the upside. So I wouldn't be surprised to see a further move to the downside. Yeah, wouldn't surprise me at all.
Which again would be your DCA opportunity. And again, I'm long anyway on a lot of different assets, but I'm just in my day-to-day trading. But yeah, that's what I'm looking for. And it may not. It may continue to go up, and if that happens, then of course.
Yeah, I wouldn't want to risk being out of the market, because there is a potential for it to be complete here, the correction, and it could just be ready to rocket to the upside. So the news we've got this week that might impact it, I think we've got FOMC minutes. I think that's tomorrow night. They could be dovish, and that could give the market a boost. And then we've got Fed Chair Powell speaking on Friday night. And once again, he could give some indication of rate cuts to come in September. That might impact the market positively if they are dovish. and I suspect there will be. I think we've been given all indications now that a rate reduction is coming now in September at the September Fed meeting. So that's probably positive risk assets. So I think all this correction is just testing our patience. And as I say, if you were to exit here, you may miss out. It could just go straight higher. But if it drops, it's just an opportunity to add. So I think it's looking positive. And it's the same across the board. We see the same sort of picture with Ethereum here. Obviously, Ethereum recently had the ETF approved and gone live. And so it's looking corrective downside. Again, I'm expecting more upside to come soon. This is just the 4-hour, but we can see, actually we can see if we compress that a little bit, that basically, I think we probably need to go to the daily actually just to see a longer term picture of this. We can see that we have had a very deep correction here, some kind of ABC correction to the downside. And I do think that we're going to push above this and even challenge the previous all-time high, which was I think somewhere around the 4.8 mark. So this is some kind of corrective move to the downside, especially when we surpass this level, these levels around here at 2,800. That would be a big positive boost. So you see before we tested higher, didn't quite cross that line of, I'll put the line in just so you can see, horizontal rate around these sort of levels here. So you can see we tested down here, we tested down here, and we pushed up here. Didn't quite reach that resistance here. But if we overtake and push through that resistance, we'll probably then, it'll become support. We'll then retest it and then probably push much higher again. So I'm again really positive here. I think this is a big correction we've had in the in Ethereum, and that was expected. We talked about it all along before the ETF actually went live. We said, you know, it's a buy the rumor, sell the news kind of event. And it's exactly what happened. It was a sell the news event. When it happened, there's a bit of a sell-off with Ethereum. We're now beginning that push. We're now beginning that push higher. So very positive there on Ethereum. We'll just touch on a couple of assets. I was asked specifically about VET. And I looked at divergence here. I always like to look, that's one of the first things I look for. Is there any divergence in place? And there's two types of divergence. There's regular divergence and there's hidden divergence. And this is actually showing a regular bullish divergence here. It's actually, we probably need to look at the 4-hour, I think, to see that properly. We have, it's actually not easy to see it there, but we do have some, I probably need to expand it a little bit. Yeah, there it is. We can see it now. Probably need to just expand that. Yeah. So we can see here, basically, we had lower lows on price and we had higher lows on the corresponding RSI. There, I can see it now. So higher lows on corresponding RSI, they have to align perfectly. So wherever you're measuring from here, has to be the same point in RSI, and the same here, same point in RSI. So we saw lower lows on price and high lows on RSI. That's regular bullish divergence. It tells you of a reversal in price coming. That's precisely what happened from here. So this was the buy signal here. So as I say, anytime we see lower prices, I'll be looking to buy the dips. We're still not in overbought territory. There's plenty of room for upside to come there on VET. And if we were to look at the overall longer-term price structure, I think there's plenty of room for upside there. So we're actually in a long-term, I will just focus in a bit. I think we're in a long-term, we've had a long-term decline, possibly actually in 5 waves. But even so, we would still expect a good 3-wave retracement of that to the upside. So I do expect some good upside to come on VET. Another one I was asked for, Anchor, ANKR, was also looking very similar, in fact, to VET. Very similar structure here, and we had the very same type of bullish divergence, where basically we had lower lows on price and the higher lows on RSI, and that indicates that we're expecting a reversal higher in price. It happened precisely as the divergence indicated, and we got that reversal higher on price. We're looking now quite impulsively to the upside here, and I expect that to continue, because it's a large large scale 5-wave move down, I think. So we expect a larger scale at least 3-wave move up to the upside, or it could even be the completion of the downward cycle. So minimum 3 waves up. So we've got a long way higher to complete that. Or we could have even beginning a new 5-wave impulse to the upside. So a couple of possibilities there, but both of them are quite bullish. And looking just very briefly at a couple of the other tokens, obviously one of the favorites that I'm always talking about is Book of Memes. When the market goes up, Book of Memes tends to go up more. Maybe not as much as Bruce's really speculative assets, but if you want to make some serious money out of not a lot of money, maybe follow Bruce's recommendation there. Slightly more secure in terms of massive liquidity here. We've got Book of Memes up 5.5% today, and as I say, when the market moves,
like I always say, guys, look, if you leverage even 2x, okay, even if you just leverage 2x, a 5% move is 10%.
Yeah. So
it's big, and if you want to do 5x, then a 5% move is 25% move. You know what I mean? So these are big moves. These are big moves.
You can calculate, obviously, when you're doing these sort of leverages, it is risky, but you can calculate the risk you want to take. And potentially the downside risk would be this previous movement down here, which is, you can see it's still 5.2 cents or something, right. Or 0.0052. And we're currently at 7. So the downside, you could do a 2x on this and still potentially be safe in terms of putting your risk down here. When I say safe, obviously you would lose substantial amount of money, but I just mean that's where your risk would be. But the upside reward is potentially massive compared with the downside risk. So it's still an interesting one, and potentially with leverage. But again, you need to absolutely understand the risks of what you can potentially lose. And obviously it can be everything. So got to bear that in mind. But as long as you're using money that you can afford to risk, then that's perfectly okay. And as I say, diversify, don't put all your eggs in one basket, and look for various different opportunities. Even within crypto, there's lots of different types of risk. So there's Bruce's ones which are high risk but massive potential return there. Then you got middle of the road, might be potentially Book of Memes, which is still high risk, high return. And then the safer ones, you got the likes of Bitcoin, Litecoin, even XRP. I mean, XRP has been moving quite nicely. We did indicate yesterday it was looking positive. It
has. And let's look at XRP, and then if we could look at Litecoin real quick, that'd be great.
Yeah, I mean, XRP, again, we seem to have some good impulsive movement to the upside. We expect more because this is impulsive. It's only in 3 waves so far. Litecoin, again, we've had a really good bounce on Litecoin. So potentially we finished the C wave down here. So it's been a big move down. So we had basically an A, B, and a C. So potentially that correction is complete. So looking at potentially a lot more upside, as this arrow indicates, potentially a lot more upside to come. And I think obviously the market's going to be reasonably correlated. As I said, we're quite positive now on risk assets. I think the environmental backdrop, when I say environmental, talking about geopolitics and the economic backdrop, is looking positive. Especially if we get good news Wednesday. And I think we're in for a really good run. I've been saying this for days. So patience is required, because when you're in a correction, as I was saying yesterday, it's often retailers that lose patience first. But when the market's correcting, it can go sideways. In fact, when it is going sideways in a corrective kind of wave, those movements tend to be longer in duration than the impulsive moves to the upside. So impulses, actually both up and down impulses, tend to be very, very quick. But corrections are by their very nature choppy, meaning sideways, choppy, overlapping. So the movement is much slower and longer in duration. And so that's why it requires patience, because what you're waiting for, of course, is the big moves. You have to endure the sideways moves to wait for those big moves quite often. And sometimes if you wait and wait and wait, you'll miss out on it if you wait till you invest. So that's why DCA is so important. when we're getting a sideways move, just add every time the market drops. You can add a bit more, add a bit more, add a bit more. So don't put all your eggs in one go. Just add in different tranches. So hopefully, just to finish off today, I'd just like to mention eBay. We won't look at a chart today, but it's just about an opportunity that's coming up. eBay is going to actually list on Wednesday, so that's tomorrow, and we're going to be doing an awful lot of media and marketing in the following week or so after that. So we'll list, that'll make the token available, and we'll give people details about that perhaps tomorrow. It's just an opportunity. Again, don't put all your eggs in one basket, but it's an opportunity. And we're going to be going out on a central exchange and on the Solana dexes. And we plan to be one of the first respectable AI tokens on Solana. So we're expecting a lot of interest for that. We've got probably in total communities that we're targeting now of more than 10 million people that we're going to be going out to with the eBay token. So this could be quite exciting. Again, no guarantees, but we'll give you more details tomorrow.
Well, I'm a big fan. We're all big fans. I think, I don't know if you guys have turned on my thing with my email. I'll have to message you about that. Love the platform though. And the eVay token has the potential to really move here. And Solana is such an explosive network. I mean,
don't forget Solana
really move.
Yeah, don't forget Solana is getting this long-awaited upgrade in September. I think it's due. I think it's called Fire Dancer, the upgrade. Supposed to be massive in terms of increasing the throughput, TPS, and lowering costs and increasing reliability, et cetera, et cetera. So I do think Solana is the right chain. I know there's a lot of really good chains out there. You mentioned Algorand. You mentioned Ton Coin. These are all good chains to build on, but I think Solana is amazing, and that's been recognized really with the price appreciation we've had so far. But I think there's a lot more to come, and I think September, I know Bruce talked about October, I think September is going to be a good month as well. So hopefully we've got a good couple of months ahead of us. So now's the time to start thinking about getting into those assets.
Absolutely. You don't want to be trying to take your place in October.
Buying the dips, not buying the peaks, but buying the dips.
Buying the dips.
We've had a bit of a dip in the market. Now's the time to probably think about DCAing in. So
amazing.
Great. Look forward to tomorrow. Going to give you lots more details about eBay and the opportunity there. And I hope you got involved from yesterday, as we were saying, time to DCA, get in. I think there's still lots more opportunity. We may even dip further, who knows? But if we do, I think it's just enhancing that opportunity for you. So all in all, things looking good. Hope that was helpful. Enjoyed the show. Thank you, Bruce. Thank you, everybody, all the listeners, and look forward to catching up tomorrow.
You got it, brother. Enjoy Albania. We'll see you tomorrow.
Definitely will do. Thank you. Bye for now.
Cheers. The great Matt Dixon joining from Albania. Well, I tell you what, I've been a lot of different places. I have not been to Albania. I'm a sucker for a place I haven't been before too. So I'd love to travel. And Albania, those places like that, it's still like old and have their own currency and everything else. Those are cool places, trust me. I mean, the world is cool. There's a lot of different cool places, but I think those places are pretty nice. That's probably pretty nice. And he's going to be on TV as well. Of course, he's on TV every day with us on the Smart Money Culture TV network. But he's going to be on a TV show there in Albania as well. So the multi-talented Matt Dixon there is at it. He's doing it up over there. So even as we are talking, of course, I'm keeping the eye on the market here. Let's see here. Dow futures. Now, sometimes Dow futures, they fake you out here. They kind of like keep it low and then they blast into the day. That could be what we're dealing with here. I'll just kind of share my screen for a second. Oops, wrong thing here. But I mean, it's like basically flat. Like the Dow futures are basically flat. Not basically. That's flat. They were basically flat before. Now it's $1. Now it's flat. Interesting though. I know we talked about gold. Let me look at this. Gold futures. Look at that. This was actually up. It was up over 26 a little bit earlier when I woke up. Yeah, I think. Anyway, if I read it right. Anyway, big move. I think it was silver as well, back over 30. If you remember, silver dipped. Hopefully, you guys bought. So I know it's people, you don't know how to buy gold and silver, and I get that. And remember, we have our partnership with the at cost metals. At costmetals.com. Use referral link clubs. Join the club. Buy gold, silver, palladium, platinum at cost. At the dealer cost. Pay what the dealer pays. You can do that today. Join at costmetals.com. Join today. Buy a little bit every month. Whatever you can afford. There's a deal in there. It's a club, So I think it's $150 or $3.99 or whatever package you pick to join. $3.99 comes with some silver coins, and then you get in like the coin of the month club or whatever you want to do, and you just buy one coin a month, or again whatever you want to do. Okay, but that can really do some positive things for you, and they're going to continue to dilute the US dollar. They have no choice but to dilute the US dollar. That is going to come with more debt to the US central bank, which is the Federal Reserve, that issues the money, which they don't even have the money to issue. They just give us the paper. It's a big scam. It is a big scam that they do. It's a big scam, biggest scam around. But they have for currently, until we change it, which we are going to change it, they have the monopoly on the U.S. money supply and Europe's money supply and many others. Central bank is a scam. Sometimes I talk about it because it's that important. Let's see here. Porter Bros. This is how the central banking scam works. Sometimes it's better to have somebody else kind of tell you, right? Third party it. So I want you to watch this. This is how the central banking scam works. This is not the first time I played it.
So what is a central bank? A central bank is an institution that produces the currency of an entire nation. Based on historical precedent, two specific powers are inherent in central banking practice: the control of interest rates and the control of the money supply, or inflation. The central bank does not simply supply a government's economy with money, it loans it to them at interest. Then, through the use of increasing and decreasing the supply of money, the central bank regulates the value of the currency being issued. It is critical to understand that the entire structure of this system can only produce one thing in the long run: debt. It doesn't take a lot of ingenuity to figure this scam out. For every single dollar produced by the central bank is loaned at interest. That means every single dollar produced is actually the dollar plus a certain percent of debt based on that dollar. And since the central bank has the monopoly over the production of the currency for the entire country, and they loan each dollar out with immediate debt attached to it, where does the money to pay for the debt come from? It can only come from the central bank again, which means the central bank has to perpetually increase its money supply to temporarily cover the outstanding debt created, which in turn, since that new money is loaned out at interest as well, creates even more debt. The end result of this system without fail is slavery, for it is impossible for the government and thus the public to ever come out of the self-generating debt. At this time, the dominant families in the banking and business world were the Rockefellers, the Morgans, the Warburgs, the Rothschilds. And in the early 1900s, they sought to push once again legislation to create another central bank. However, they knew the government and public were very weary of such an institution, so they needed to create an incident to affect public opinion. So, J.P. Morgan, publicly considered a financial luminary at the time, exploited his mass influence by publishing rumors that a prominent bank in New York was insolvent or bankrupt. Morgan knew this would cause mass hysteria, which would affect other banks as well. And it did. The public, in fear of losing their deposits, immediately began mass withdrawals. Consequently, the banks were forced to call in their loans, causing the recipients to sell their property, and thus a spiral of bankruptcies, repossessions, and turmoil emerged. Putting the pieces together a few years later, Frederick Allen of Life magazine wrote, "The Morgan interests took advantage to precipitate the panic, guiding it shrewdly as it progressed." Unaware of the fraud, the Panic of 1907 led to a congressional investigation headed by Senator Nelson Aldrich, who had intimate ties to the banking cartels and later became part of the Rockefeller family through marriage. The commission, led by Aldrich, recommended a central bank should be implemented so a panic like 1907 could never happen again. And in 1913, with heavy political sponsorship by the bankers, Woodrow Wilson became president, having already agreed to sign the Federal Reserve Act in exchange for campaign support. And 2 days before Christmas, when most of Congress was at home with their families, the Federal Reserve Act was voted in, and Wilson in turn made it law. A world banking system was being set up here, a superstate controlled by international bankers, acting together to enslave the world for their own pleasure. The Fed has usurped the government. Now, the public was told that the Federal Reserve System was an economic stabilizer, and inflation and economic crises were a thing of the past. Well, as history has shown, nothing is further from the truth. The fact is, the international bankers now had a streamlined machine to expand their personal ambitions.
It's alive! It's alive! It's alive!
For example, from 1914 to 1919, the Fed increased the money supply by nearly 100%. Resulting in extensive loans to small banks and the public. Then, in 1920, the Fed called in mass percentages of the outstanding money supply, thus resulting in the supporting banks having to call in huge numbers of loans, and just like 1907, bank runs, bankruptcy, and collapse occurred. Over 5,400 competitive banks outside of the Federal Reserve System collapsed, further consolidating the monopoly of a small group of international bankers. Privy to this crime, Congressman Lindbergh stepped up and said in 1921, "Under the Federal Reserve Act, panics are scientifically created. The present panic is the first scientifically created one, worked out as we figure a mathematical equation." However, the Panic of 1920 was just a warm-up. From 1921 to 1929, the Fed again increased the money supply, resulting once again in extensive loans to the public and banks. There was also a fairly new type of loan called a margin loan in the stock market. Very simply, the margin loan allowed an investor to put down only 10% of a stock's price, with the other 90% being loaned through the broker. In other words, a person could own $1,000 worth of stock with only $100 down. However, there was a catch to this loan. It could be called in at any time and had to be paid within 24 hours. This is termed a margin call, and the typical result of a margin call is the selling of the stock purchased with the loan. So, a few months before October in 1929, J.D. Rockefeller, Bernard Baruch, and other insiders quietly exited the market. And on October 24, 1929, the New York financiers who furnished the margin loans started calling them in masse. This sparked an instantaneous, massive sell-off in the market, for everyone had to cover the margin loans. It then triggered mass bank runs for the same reason, in turn collapsing over 16,000 banks, enabling the conspiring international bankers to not only buy up rival banks at a discount, but to also buy up whole corporations at pennies on the dollar. It was the greatest robbery in American history. But that didn't stop there. Rather than expanding the money supply in order to recover from this economic collapse, the Fed acted it, fueling one of the largest depressions in history.
So, it is a big scam. It's a big scam. You do not want to be in the U.S. dollar. The U.S. dollar is a scam. And we have a way out. These are the families right here that own and control the U.S. central bank called the Federal Reserve. They are, then their inflation is their tax. Okay, every 100 billion that they print, which they print a lot of 100 billions, okay, every 100 billion that they print, they keep 3 to 5 billion for themselves. That's how much debt is attached to it. And that's why we have $34 trillion in debt. Just to give you an idea, when Trump floats that we're going to pay off the national debt with Bitcoin, the total market cap of Bitcoin is like 1.2 trillion. We owe 35 trillion to the central banking cartel, the U.S. central bank, the Federal Reserve. And we are never meant to pay that off. Okay, that will never be paid off. As they said in that quick video, the only result is slavery. And that is why this group of people has had so much trouble over the history, because that's what they do, is they set up this debt system and then enslave. So the families are the Rothschilds, the Rockefellers, the Morgans, the Warburgs, Goldman Sachs, Lehman, Kuhn Loeb, Lazard, Israel Moses Schiff, and Stillman. These are the families who own the Federal Reserve. We have to end it, guys. We have to end the Federal Reserve. Stop taxing us. Stop taxing me. Whoa. Set me free. It's my song. I may go up to New York. If I do, it'll be pretty fun. All right. That's it, guys. I'm done for today. A couple other ones here, of course, that I have been watching. Where can we find the video that was played earlier? Well, you can just watch it here on this show. It's easy to find where it is. It'll be at about 15 minutes in the broadcast. So whether you're watching on YouTube or Twitter, this is financial treason, needs to be canceled. Their assets frozen and expatriated as a form of. You're absolutely correct. You're absolutely correct. And Michael, in 1933, they stole all of our family's gold. Roosevelt helped them do it. So 1913, they started the Federal Reserve they pushed through on December 23rd in the middle of the night. They pushed through this legislation starting this central bank. It was not supposed to be allowed. It's illegal in the United States. It's illegal. We're not supposed to use this paper fiat money. So Woodrow Wilson pushed this through. He was backed by the bankers in order to get elected. They pushed him in. They got elected. He passed it in the dead of the night in 1913, and they have controlled the United States ever since. Completely controlled. So in 1933, they got Roosevelt to sign a executive order, and they confiscated everyone's gold. And the gold is in the Federal Reserve Bank in New York City. So not only do we need their assets canceled and frozen, we need to return the gold to the people. They told everybody, we're going to take your gold, and they gave everybody $25 per ounce. And you see right now, it's like $2,600 per ounce. And they told everybody, we're going to give your gold back, but they never did. They don't teach you this stuff in history. And silver, 16.1 bill felled. Yeah, it's a mess. It is the biggest scam. And that's why every day I come on here and I say, end the Fed. And that's why Thomas Massie is my new mascot. I love Ron Paul too, but Massie's the man in there. And he's the one proposing it right now. And we need to support him. We need to get it done. Here's the thing, guys. We will not be free until we end the Fed. We have to get these people out of control of our country. They bribe the government workers. They bribe all the representatives. AIPAC should be registered as a foreign agent. JFK made AIPAC register. Made AZC which was the predecessor of AIPAC, registers foreign agents. That's probably what got him assassinated. Everybody, of course, thinks it was making the silver notes, and maybe it was that as well. But trust me, making them register as foreign agents was a big deal, because then they have to disclose what they're doing. They have to disclose who they're bribing. But that's the other thing Massie brought up is, you know, guys, we shouldn't have people with dual passports running our government. And that's, I put that in the beginning. I mean, you know, the head of the FBI, the Secretary of State, who is basically the de facto commander in chief. I mean, these are the people that are rumored to have these dual citizenships, which really means, you know, that they're dual allegiance. How can you not have an allegiance to a country that is your homeland or whatever? I mean, of course you're going to have, you have a passport there. Of course you're going to have an allegiance there. Anyway, great show today, guys. I love you very much. I will be back on TV, but yeah, we have to do it. We have to. We have no choice. We will never be free. That 35 trillion will never come down. We can never pay it down. We can never pay the $35 trillion in debt down, because we're using dollars to pay it down. Every 100 billion again comes with 3 to 5 billion in debt. Like it's not designed to ever be paid down. It's designed to enslave everybody. And that's why they've had trouble in so many countries over history, because it only produces one thing, and that is enslavement. Not saying anything bad or whatever. That system is a failed system. And if you don't think it's a failed system, just look at the mess that we're in. Anyway, I'm out of here. I'll be back on the TV in 5 hours. Cheers.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.